We run up them digits, we run up that money, we run up that digits, we run up the money, we run up them digits, we run up that money. Hey, that's the theme, that's the song for today's video. Hi, Reggie. What's up? Welcome to my channel, Marsha the Mogul, where we talk about finance, right? We get to the money over here. We talk about credit, taxes, and now we're gonna be getting into this investment bag and life insurance, y'all. I'm out here helping startup entrepreneurs, single parents, those of us ready to quit that 9-to-5, those of you who are ready to put your bills on auto pay, right? That's what we do over here. So if this is your first time here, welcome to my channel. If this video turns out to be helpful and you like what you hear and this is the type of community you want to be part of, go ahead and subscribe, okay? Right? And for my returning moguls, what's up, y'all? Welcome back. Long time no see. Highly anticipated video. We get into the W-4. We're getting into, look at me. Let me get my words together. We're getting into the W-4 form calculator. I say a form twice. Y'all know what the title say, okay? So this is actually my second time recording it. This is why I need to get back on my YouTube. You know, get it back on here. But nonetheless, in this video, this is around the time, it's been about 30 days since tax season has closed out for the previous year. And if you're an employee or if you're making money and you want to make sure that you are having enough withheld from your paycheck, or you want to make sure you're paying enough in your taxes, this video is for you, right? So what we're gonna do, I'm gonna show you a tutorial. I'm gonna get into it real soon, but what I find is normally when people go to file their taxes, they either get a refund or they owe in taxes. Hardly ever do you see people breaking even, right? If you want to break even, there are methods that you would use, but this video is not for that. So in this circumstance, right, you want to have your pay stub prepared, your income, all that good stuff. You need to have that with you now so you're not going to rummage for it once they start asking these questions in this form. Now, a lot of times when you get a refund, it's because you're overpaying in taxes. If you're overpaying in taxes, then you're giving Uncle Sam a interest-free loan, right? You're telling him to hold your funds until next year. And, you know, if that's not something that you're interested in, you can use this tool to kind of basically finesse or change your W-4 so that you're having just enough withheld so that you don't get a refund, but you get that cash flow back into your pockets today. This is how it first was introduced to me, right? Somebody was like, did you know, you could get Uncle Sam to pay for your lifestyle, right? If you watch some of my early videos that I made a couple years ago when I first got into my personal finance journal, that's what got me so much like into entrepreneurship, is the fact that you could take advantage of different tax strategies, right? Not only tax strategies, but credit and enterprise, all that good stuff that comes with business. I love it. I'm so passionate about it. But for this particular video, if you end up owing Uncle Sam at the beginning of the year, if this is a typical scenario for you where you owe, then this estimator will actually help you as well so that you can stop owing, or if you do owe, you can prepare better and pay throughout the year, or you can adjust your pay stub to have a little extra withheld if you just want to simply break even, right? This is for you as well. No matter what outcome you want, this estimator tutorial is going to show you how to input the figures, what you need to pay attention for, what you need to look for, how to answer those questions, right? I'm just giving you the breakdown. If you are actually a client and I sent you this video, make sure you watch until the end, okay? Make sure you actually pull up your W-4 form calculator right now as you watch this video. If you have another device, do it on your laptop and watch the video on your phone. That way you can go through it. And if you need to, you can just slow down the video, right? If I'm talking too fast, there's a little gear icon in the YouTube app where you can slow down the speed that I'm talking and you can follow along a lot slower. You can also mute the video so you can just see the visual, or you could just listen to it as you go through it, whatever works for you. Everybody learns differently, right? That's why we're here on YouTube, because it's called YouTube University, but whatever works for you works for you. So I'm not gonna keep talking and running my mouth. I'm just so happy to be here, so excited to finally have this video for you so that it can help you get through this process, and hopefully it saves somebody some money, right? Well, let's go ahead and get into it, money moguls. Hey, what's up? I'm gonna get right into the Form W-4 calculator training. So to get started, you're going to need to pull up the calculator. So over here I have Google. I'm going to type in W-4 calculator. And normally it's the first link. It should take you directly to the irs.gov website. On the first page, you should see something like this that says how it works and what you need. As it mentions, it's being used to estimate your federal income tax withholding. Hold on, let me just make sure. Okay, I am recording because I've recorded this video 3 times now. So, okay, bear with me. You're going to need, so basically you're going to use this tool to estimate your federal income tax withholding. Keep in mind, this is only for federal taxes and does not apply to state taxes. This is why we're on the IRS website. So you can use this tool to see how your refund, your take-home pay, or tax due are affected by the withholding amount from your paycheck. You want to choose an estimated withholding amount that works for you. So if you want a refund, it's going to tell you exactly how much you need withheld to make sure you get a refund. If you want your money right now, it's going to tell you what you need to withhold in order to get the most cash flow back into your paycheck as of today. Now, before you get started, you want to have your pay stub. And for this example, I do have a pay stub created. And then also you want to have other income information. So if you have side jobs, self-employment, and investments, now is the time to go get that. You don't want to start going through the questions and they ask you something. Now you got to go find the paperwork. So just have that to begin with. And then also you want to have your tax return. Now you may not even need all of those, but you definitely need your pay stub. So let's go ahead and click use the let's go ahead and click use the tax withholding estimator. Now, the first thing it asks is about you. Now, in this situation, I need to bring up my example, right? So for our example today, we have a family of 4. And with this family of 4, they are filing married, but filing jointly. The household income is $100,000 a year. The husband makes $60,000 a year. The wife makes $40,000 a year. And they have 2 dependents. One of the children is 2 years old. The other child is 5. And they pay a total of $4,200 a year in child care expenses. Now, we're going to need this information later on. But initially, it's asking what filing status is being used. And for this example, we're going to be using what this says, which is married filing jointly. Most of the time, if you are married, you're going to use this, but some situations it makes more sense to file married filing separately. In most situations, if you are not married, you're filing single. If you have dependents, you may be filing head of household. Also, if you are single, meaning not married with children, you and your partner reside together, you may also be considered head of household. So, next question, it says, do you or will your spouse have a job or pension that regularly withholds federal income taxes from your paychecks or pension payments? More than likely, if you're going to use this calculator, it's going to be yes, because that's the whole point of going through this, is so that you can see how much needs to be withheld from your paycheck. Now, for this example, this couple does plan to claim their dependents on their tax return. If you have dependents, you want to go ahead and check that off as well. Now, there's some other options as well that mentions that Mr. Wallace here will be 65 years or older as of January 1st, or his spouse will be 65 older as of January 1st. Also, it mentions an option to select if they are blind. It does not mention that, so we're not going to check that off. And then last but not least, I can be claimed as a dependent on someone else's tax return. Now, keep in mind, if you're going to check this off, you cannot claim head of household. So for this scenario, neither one of these adults are going to be considered dependents on someone else's tax return. There's a little question mark here that if you're not sure what this means or what it's asking, you can click it and it'll give you a breakdown. I'm just summarizing everything for the sake of the tutorial just to keep it efficient. So I'll go ahead and click next. And here is where it asks about income. In this scenario, each of the partners here have a job. So if you are doing something for yourself, you just click one. You have one job, you just keep one here. If you have a spouse who has a job, you put two. If you and your spouse hold more than one job, or you hold more than one job, then you account for it right here. It will tell you that right here. That's what it explains. It says that the first one has been added for you. Now, for the most accurate representation, you want to include all of your income, but we're going to start with the pay stubs for this example. Starting here, I have an example of their pay stubs, which this should make it simple because we're just going to, whatever is on your pay stub, that's what you're going to enter into this calculator. So we have some important information. We got the pay record, pay date. We have federal income tax. We have a gross pay. We have current pay, all of that. You're going to need to be able to see that information to fill out this calculator. So with that being said, we're going to start with Mr. Wallace first. And we're going to start with this pay stub. It says that he makes $60,000 a year. With that being said, he's paid on an hourly job. It says here, describe your source of income. As you can see, we're going to go ahead and click an hourly job. If you work a salary, or if you have pension, or if you receive Social Security income, or none of the above, you would just select as applied. This will be for Mr. Wallace. I'm filling it out as him, so I'm going to go ahead and click myself. If you're filling it out for yourself, you click myself. Now, this particular job, he's going to code throughout the entire year, January through December. Most likely, in most situations, that will be for you as well. But let's just say you have a seasonal job, or you only work part of the year for a job and you may have left the company. What am I doing? You may have left the company, or you may have been let go. Whatever the case may be, contract ended, you only had that job for a part of the year. So you want to consider all of these when you're filling this out. So if you did have a part-time position for part of the year and you had another one for the rest, account for both. But for this example, Mr. Wallace only has one. And he gets paid every 2 weeks. It says, how frequently are you paid? And I know this by just looking at the pay record. That looks like 2 weeks worth of payments. Twice monthly is different than every 2 weeks, so keep that in mind as well. It says, using your most recent pay stub, when did your most recent pay period end? Based on this here, it says it ended on April 21st, right? And it says, what was your most recent pay date? Pay date here says April 24th. So that's what we're going to enter. You're going to enter the same date that's on your pay stub. Select the option that best describes your current situation. The first option, my last paycheck was a good representation of how much I earn on average each pay period. The second option says, my paychecks vary week to week. Averaging 2 to 3 paychecks would provide a more accurate picture of how much I make. For this example, Mr. Wallace's paychecks do not fluctuate. He gets pretty much the same hours on a weekly basis. He works 40 hours a week for a total of 80 every 2 weeks. And we're just going to say this is the best representation. If your paychecks vary check to check, you may want to include another one just for an accurate representation. If that's you, you'll just select the second option. So it says enter wages per pay period. For this current pay period, he got paid $2,500. And it says enter wages earned year to date. So gross wages, not including taxes, or before taxes, is $22,500. Now, I created this pay stub myself, so it might not be accurate as far as the numbers adding up. But the cool thing about this, it asks, based on the information provided, it looks like your annual income from this job is $65,000. Is this correct? Now, according to the example, Mr. Wallace only makes $60,000. So it gives you an option to manually put that amount, or you can just leave it as is. So I'm going to click no, because I just want to make things easier for myself. In a real life example, you want to make sure that that number that they have here matches what you took from your pay stub, or something could be off. So The next question, enter federal taxes paid per pay period. This is federal income tax. That's all we're looking at. We're not looking at any of the other taxes that are taken out. Federal taxes this pay period are $236.19. It says enter federal taxes paid year to date. You see here, Mr. Wallace has paid $2,125.71 in federal taxes year to date. Now it says select any that apply for this job. I contribute to a 401k. I contribute to a health insurance plan, HSA or FSA. I am getting a bonus. I got a bonus, or none of the above. For this example, none of the above. If you contribute to a 401k or any of these other listed options, you want to select it and enter that amount so that they can give you the best results. Now, moving along to the second source of income, we're going to say that this is for Mrs. Wallace. We're going to move on over to her pay stub. Now, Denise makes $40,000 each year, and she also gets paid an hourly job. Now, this is, if I was Mr. Wallace filling this out, I would click my spouse. Mr. Wallace. If I was Mr. Wallace filling it out on behalf of Denise Wallace, I would put my spouse. So she also holds her job throughout the whole entire year, and she also gets paid every 2 weeks. Now, her most recent pay period also ended on April 21st, 2024. And then her pay date was April 24th, 2024. This may be different if you're filling this out for yourself and your partner, then, or you and your spouse specifically, because if you are married, then that's when your income gets combined. But if your spouse is getting paid weekly, then these dates would probably not match. Just a heads up. Same thing. Select the best option that best describes your spouse's current situation. My spouse's last paycheck was a good representation of how much my spouse earns on an average each pay period. All right. Enter wages per pay period. All right, Mrs. Wallace made a total of $1,666.40. And wages earned year to date, $14,997.80. Now below it says, based on the information provided, it looks like your spouse's annual income from this job is $43,326 this year. Is this correct? For the sake of the example, I'm going to click no and just put 40,000. And it asks for federal taxes paid per pay period. In her situation, she paid $123.66 towards federal taxes. And year to date, she's paid $1,112.94. Same thing, get asked, select any that apply for this job. My spouse contributes to a 401k. My spouse contributes to a health insurance plan, HSA, FSA. My spouse will get a bonus. My spouse got a bonus. None of the above is for this example. Now, it also asks for other sources of income. So in this situation, if you are employed, or if you have a self-employment situation, you want to account for that income here for both yourself and your spouse. If you have investment income, if you have consistent unemployment insurance income, or any other source of income, which also, if you click this question mark, it'll just tell you all of the other different incomes that would be considered other sources. Now, in this situation, they just gave us 2 pay stubs, so we're going to stick with that. It says, also withholding and estimated tax payments on other sources of income. We actually don't need this anymore, so let me see. Yeah, we don't need this anymore. So I'm just going to full screen this. Bear with me. And it asks about withholding from other sources of income. So if you have income on which there's taxes being withheld, that's not your paycheck, that's where you want to include this amount. If you normally end up owing taxes and you're the type of person to pay taxes throughout the year, you want to include the amount that you pay each year, estimated on the regular basis. So it does not apply in this example. So we're going to click next. Now the next page is for adjustments to income. This is what directly reduces your earned income. So in this scenario, the family is making $100,000. So anything that they put on this page will be subtracted from that 100K dollar for dollar. So for your situation, if you are paying student loan interest, or if you have the educator expense deduction, or if you pay alimony, moving expenses for members of art services, all of those different things you want to put here. Now we're going to come back to this page at the end because I want to show you something. But for this example, we actually don't have any adjustments to make. So I'm going to click next. The next page goes over the standard or itemized deductions. Now, everybody is subject to income tax, and everybody qualifies for a standard deduction no matter what their filing status is. For this example, the standard deduction for the family is $29,200. But if they were paying a mortgage or making large gifts to charity or had large medical expenses, it probably would make more sense for them to do itemized deductions. In most situations, even with my clients, 99.9% of them go with the standard deduction because this does not apply. Now, you can always test it out and calculate and see what makes most sense, but I'll save you the time and let you know that more than likely you're going to get the biggest deduction taking the standard. Okay, so with this standard deduction, this is the best case scenario in most situations. So it says here, would you like to see if itemizing your deductions would be to your advantage? Basically, it will tell you what itemizing means and what it will actually help you with and what the standard deduction will help you with. So for this example, we're just going to use the standard deduction. So select no, just use the standard deduction. And then we're going to click next. This is where it asks about any tax credits that you might qualify for. For this example, since we know that these two taxpayers have children, they would qualify for the child tax credit or the child independent credit. In this situation, they didn't provide us with the age, so I'm just going to say one of them is going to be 34, one of them is 32, and it says enter the age the child will be on December 31st. So let's just say that both of the children's birthday has already passed. So the one child will be 2 at the end of the year. The other child will be 5 at the end of the year. Why is this important? Just click the question mark and it'll tell you exactly why. Now, the next question is about the child independent care credit. Now, this is in regards to who is qualified to be considered for the child independent care credit. In this situation, since both children are still going to childcare, we're just going to put 2. Now it says enter the amount of qualifying work-related childcare expenses. Now remember on an example, they pay $4,200 a year. That's how much they pay out of pocket without any assistance if they were to qualify for it. So you wouldn't want to include any portion that you're getting assistance with, only the amount that you're actually paying out of pocket. In this case, this is how much they are paying. Now it says enter the number of qualifying children for the earned income tax credit. The earned income tax credit is a benefit for working people with low to moderate income. You can go through the assistance to see if you qualify for the earned income tax credit. But if you filed taxes before and your income hasn't changed as much as it did last year, you could pretty much just say that, yes, they do qualify for the earned income tax credit. If you're not sure, just click the question mark and click EITC assistant, and they'll help you determine that. In this situation, let's just say they do qualify for the earned income tax credit in regards to both children. Now, it says it's limited to 3, so keep that in mind. Now, adoption tax credit does not apply. Neither does foreign tax credit, educational tax credit, homeowner, business. None of that applies in this example, but if it does apply to you and you typically would qualify for these credits, this is probably why they suggest you have your tax return because of course they don't expect you to remember all of this. But if you if you hire someone like myself to do your taxes, a tax preparer, then you can check your tax return to determine if you qualify for these type of credits. And if you most likely, if you qualify for them last year, you might qualify for them this year. So if that is you, go ahead and look through those. We're going to go ahead and click next, and this is where we get our results. So let me go ahead and open this up. It's loading. This is my favorite part of the process. Now, you more than likely you want to do this at the beginning of the year so that you can use all of the estimators, I guess all of its tools that it has. In this tool particularly, you can actually adjust and make changes. But for this time around, since we're doing this in May, which is close to the middle of the year, it's a little limited, but it still gets the point across. So with the information we entered, it looks like they're going to be having $9,340 withheld from their paycheck with the current withholding. So however they have it set up, this is how much they're going to be paying to Uncle Sam. Come tax season, they're gonna get 60,000 is a far reach. I'm ahead of myself. They're gonna be getting $6,145 as a projected refund. If they don't change anything, this is what they will get. If they want this result, they're gonna go ahead and scroll down and click download the pre-filled form W-4. This makes life so much easier. Now, your employer may provide you with a W-4 to fill out. You can also just go through the steps A through B through C, and they will tell you exactly what to enter on that form. But if you're like me and you like to use things digitally and you're just good with stuff like that, you're going to click the downloaded version. And the good thing about this is you can actually type in your information. So if I was Mr. Wallace, I would type in my name here. I would type in all my necessary information, social security number, and then address, of course. They already have the filing status selected. If it's incorrect, just unclick it and click the right one. It's very simple to use. And then right here, bingo, this is the part that's most complicated for people. When it comes to step 3, they have changed the W-4. So it's not as easy as just putting a 1, 2, 3, or 4. You actually have to come up with a figure by doing some math, right? Who has time for that, right? You just started this job. You're just trying to get your paychecks to roll in, right? So if you're unsure what to put on line 3, this estimator will tell you exactly what to put there. This is why I like it, because some of my clients are like, well, how do I fill out my W-4? And the first thing I do is recommend that they go through the estimator to determine that based on how much they want to get back. Or if they're going to owe, they can actually limit how much they owe or what their tax liability is. Now we're going to go back to the estimator because I want to show y'all an example. Now let's just say this family is, they're like, look, we need some extra cash flow in our pockets today. They don't want to give Uncle Sam an interest-free loan. Now, the part on this estimator, which is not showing up, there's normally a, what do you call it? Like you can make adjustments, right? So it'll be like a little graph or something where you can change the amount of the projected refund. Let's just say this family is wanting to put more money back in their pocket, so they are okay with having a $2,000 refund. They will adjust the marker to move it down to a $2,000 refund, and this would be adjusted to reflect what the new W-4 form should look like. They would download the pre-filled version, and there's another one down here for the spouse, and they would give that to their employer to start with the next pay cycle. If they're okay with what it says, they will leave it the same, period, point blank. Now, if this family decided to start a business, a digital business this year, right? We're in the month of May. They've already had to spend a lot of money to get it started, right? They've had to purchase a website. They had to purchase some courses and some training classes. Mrs. Wallace had to get certified. Mr. Wallace had to travel to a different state and meet with different people. That was money that was spent. And if you didn't see my last video where I'm breaking down different tax deductions that every entrepreneur qualifies for. You might want to go ahead and take a look at that, but I digress. Now, these different tax deductions, they're going to take advantage of this year. Let's just say where they are at now, they have not made a profit. They've actually lost about $10,000. So what does that mean? If they lost $10,000 in business tax deductions, we need to account for that, because technically they didn't make $100,000 if they had to take a loss in their business. So if you're a startup entrepreneur and this is your first, second, third year in business, or you're just trying to determine what your tax liability is going to be based on how many deductions you take, if you profited, that's a little different. But if you took a loss, I'll show you exactly where you want to enter that. So you're going to go back to where it says adjustments. And again, this example, Mr. and Mrs. Wallace, they started their business. They've lost $10,000 just going to invest in the business. That's just what happens. So they're going to click right here, certain business credits for reservists, performing artists, and fee-based government officials. Don't get so caught up in the language. Just trust me. Trust the process. So if you put $10,000, you can put any amount. Like, let's say you lost $30K. Okay, let's see what that looks like. But for this example, $10K is just enough. That's reasonable, right? First year in business. We're going to go back to the results, and we're going to see exactly how this has impacted their tax refund. So Uncle Sam is actually going to give them money for running a business and for taking a loss. I'm going to show you how that deduction impacts the refund. It increased their refund by about $1,200. So $1,200 actually will go back to them out of the $10,000 that they spent. So when people say tax deductions, I don't want you to think of it as dollar for dollar. Now, if you take a loss, yes, it's dollar for dollar, because now that is considered an adjustment. But don't get lost in the sauce, right? They took $10,000 worth of deductions, but it only increased their refund by $1,200. Same thing, if they wanted this money to go back to them right now instead of waiting for a refund, they just increased it by what? $1,200. $1,200 divided by 12 is $100 each month. $100 divided by 4, that's like what? $25 a week. I don't know what they're using it for, but just imagine if they're using that money to invest. They're now using $100 each month to invest either into a custodial account for their children, or maybe they have a brokerage account that they're using as an opportunity fund. Either way, they increase their cash flow. And that's the whole point of me showing you this, so that you can find a quick and efficient way to increase your cash flow. If you started a business and you did not make a profit, you can now take a loss on your income, which ultimately reduces your AGI. This is what started me in a business, y'all. Like, me learning that I can pay less taxes because Uncle Sam wants to pay me for running a business. I was all in. So if you need to redo this training, go back as many times as you want. If I went too fast, I'm so sorry. You can always slow it down by clicking the settings button and just slowing down the speed of the video so you can follow along while you go through the calculator. That might work for some people, because I know sometimes it works for me. But yeah, that's it. That's the end of this training. How was that? It wasn't bad, right? Again, if you need to go back, watch it over, slow it down, recapture some moments, go and do that, right? But if you have additional questions, if you're not really sure what to do next, or if this video just didn't make any sense to you, please leave me some feedback in the comment section. It's always appreciated. And those questions that you have, somebody else might have it as well. So this is a community where we are striving to help one another. We're trying to spread the knowledge. We want our people to be educated on financial literacy here. So this video is particularly about taxes and how to correct your withholding for your paycheck, or how much you have withheld from your pension. Whatever the case may be, we want to make sure that you are either breaking even or you're getting a refund from Uncle Sam. All right, that was the whole purpose of this video. So if you enjoyed it, please go ahead and give me a thumbs up. Again, if this is your first time on this channel, feel free to subscribe. Come on, what you waiting for? We're trying to get our subscribers up to 1,000, right? I want to start being able to go live on YouTube. This has been a goal for me for so long, y'all. So help me do that by go ahead and subscribe to this channel. And then we can have some in-person feel. Well, not in-person, but we can get it like an in-person feel for each other in this community. If I can go live, that would mean so much for you all as well, because now we in real time and you're not waiting for the video to be uploaded and, you know, me dragging my feet. So I'm just looking forward by the end of this year to have 1,000 subscribers, y'all, and have, I think, 500 watch hours. So y'all gonna see some longer content being developed and created, but it's gonna be valuable information, right? These tutorials, they are pretty long, but it's because it's meant for it to take you step by step through the process. In case nobody's there to be with you and hold your hand, you could just pull up the video and use that as kind of like a guidance or coaching through, you know, because I get it. We need help. Not everybody is willing to sit through these types of things and go through it with us. And you always don't want to spend money just to do something that, you know, that's going to help you either get more money or save you money. Like, I get it. So welcome to YouTube University. Welcome to Marsha the Mogul. Welcome to the Money Moguls YouTube channel, right? And I'll see y'all in the next video. Oh, last thing, I'm gonna go ahead and drop a video right here. This video, I'm going to talk about the most common tax deductions for entrepreneurs. Go ahead and check this video out if you haven't already. And if you are a business owner and you're looking to start bookkeeping, this video will help you. Peace and prosperity. I'll see you in the next video.
Hi, Reggie.